The sixth component of a trading strategy is called position size. Position size is the volume of a trade or order. In Forex trading, this is represented as lots. You need to assign a lot value to the trade and determine how many lots to trade per smallest price change that a given exchange rate can make, which is called a pip. So first, let's talk about pips. A pip, which is price interest point, is the basic unit in Forex trading that measures the change in value of a currency pair. Basically, a pip is the smallest amount by which changes in a currency pair's value can be measured. Most currency pairs have 4 decimal spaces, and the pip is represented by the 4th decimal space. So for example, if the price of the Euro USD is 1.2305, the 5 at the end represents the pip. If price moves from 1.2305 to 1.2306, that is a 1 pip increase. If price moves from 1.2305 to 1.2304, that is a 1 pip decrease. Some currency pairs, like the US dollar Japanese yen, have 2 decimal spaces, and the pip is represented by the 2nd decimal space. For example, if the price of the US dollar Japanese yen is 121.05, the 5 at the end represents the pip. If price moves from 121.05 to 121.06, that is a 1 pip increase. If price moves from 121.05 to 121.04, that is a 1 pip decrease. It is important to point out that a lot of brokers show 5 decimals or 3 decimal spaces. The 5th or 3rd decimal is not a full pip, but rather a fraction of a pip. So just keep that in mind if you're using a broker that uses 5 decimals or 3 decimals. So now let's move on to lots. There are 3 lot types. There are micro lots, which represent 1,000 units, and that would be 0.01 lots, which is about 10 cents per pip. There's mini lots, which represent 10,000 units, and it's written 0.1 lots, and that equals about $1 per pip. And then there's standard lots, which is 100,000 units, and it's written 1.0 lots, and that represents about $10 per pip. So if you wanted to risk $2.50 per pip, you would use a lot size of 0.25 when placing the trade. Now it is possible to understand position size better. Let's say you place a buy order on the Euro USD at 1.10420, and you place your stop loss at 1.10220. You are willing to risk a total of 20 pips on the trade. If you place the trade using 0.1 lots per pip, you are risking $1 per pip and a total of $20 on the trade. This is the position size of the trade. Finding the right position sizing strategy for your trading personality and risk tolerance is like walking a tightrope. On one side, you have how much risk you're comfortable taking, and on the other, your profit goals. You want to find a position size strategy that lets you sleep at night, but still allows you to reach your profit goals in a reasonable amount of time. You need to find the sweet spot that lets you make profits while helping you stick with the trading over the long term. And this is a very important part of any trading strategy.